If we go back now to the material for the video tutorial, the last area that I would like to consider is stamp taxes. Stamp taxes will not feature in the exam for very many marks, but they could be some quite easy marks if they come up in a question. And there are three taxes that you need to be aware of: stamp duty reserve tax, and stamp duty land tax. And all three of these are paid by the purchaser. And we pay stamp taxes on shares and land and buildings. First of all, stamp duty itself is on the transfer of shares via a written stock transfer form, so a paper transaction, as opposed to stamp duty reserve tax, which is based on an electronic transfer of shares. Both of these taxes on shares are at 0.5%, so we always pay 0.5% stamp duty on shares. A couple of minor points: stamp duty is subject to a minimum of £5 and is rounded up to the nearest £5, and stamp duty is not charged if the proceeds are no more than £1,000. So basically, we pay stamp duty on shares at 0.5%. Stamp duty land tax is paid on UK land and buildings and can be up to 12% depending on the type of property and the proceeds, and the rates are given in the tax tables. And if we have a look at the tax tables just to see the information that is provided, we have the rates for stamp duty land tax, and you can see that we have different rates for non-residential properties and residential properties. If we look at non-residential properties first, so this will be commercial properties, and this is probably what you're most likely to see in the exam. Non-residential properties, we have no stamp duty land tax if the property costs £150,000 or less. And then after that, 1% between 150 and 250,000, then 3% up to 500,000, and then 4% above 500,000. And for non-residential properties, those percentages apply to the total value. So if, say, we bought a property for £300,000, we look at which band that falls into, and that's between 250,000 to 500,000. So we use 3% and we apply 3% to the full £300,000. We don't get the benefit of the 0% band or the 1% band. Now that's for non-residential properties. For residential properties, the limits are different, and stamp duty land tax works on a stepped basis. So for residential properties, the nil band is only £125,000. Then we go up to 2% from £125,000 to £250,000, but this time that 2% will just apply to the value between those limits. Then above 250,000 we pay 5%, up to 925,000. Then it goes up to 10%, up to 1.5 million, and then 12% above that. So if we bought a residential property for £300,000, we would pay 0% on the first 125,000. Then we would pay 2% from 125 to 250,000. So that will be on the next £125,000, and then we would pay 5% from 250,000 up to 300,000. You're also given the rate for stamp duty. So stamp duty, which would also apply to stamp duty reserve tax on shares, at 0.5%. Going back to the material for the tutorial, there are a couple of exemptions that you should be aware of. First, we do not pay stamp taxes on gifts, and secondly, there are no stamp taxes if we transfer assets between 75% group companies. So those are the stamp taxes rules. You can get lots of help from your tables. You just need to remember who pays, always the purchaser, what it's paid on, and the fact that we apply the percentage to the full value if it's non-residential, but on a stepped basis if it's a residential property.